All right. Hello, everybody. Welcome back to another Sunday Futures episode. It is Sunday, September 22nd, 7:47 p.m. We are almost done with the weekend. A few hours away till we're back into the global capital equity markets opening up. And we've got a lot to talk about on this episode. First of all, thank you everybody for being here. Hopefully you've had a good weekend. A productive weekend, got some stuff done. Hopefully spend some time with your family and friends. I actually got a lot of work done this weekend. I had to edit a lot of different stuff, just like get stuff ready for the week. So it was a pretty boring weekend for me. Nothing too crazy, but got some of that stuff done. And now we're into the last week of September, which is going to be really interesting because it's been a hell of a month. And I want to review kind of what's happened this month, why it's happened. Obviously, this week, it's kind of crazy to even think that we don't really, we're not talking about it that much anymore, but 50 bips. We got 50 bips. We actually got 50 bips. And I think the reaction to that has a lot of different nuances. I posted on Twitter today, hey, after 50 bips, are you bullish or bearish? And a decent amount of people said they were bullish, but still there's a resounding amount of people that feel bearish on 50 bips versus not. So I want to look through a lot of data, have a lot of charts, kind of got to dive into all that stuff. Intel, some breaking news on them on a weekend that came out. We thought there was breaking news last Friday, then this Tuesday with the Amazon partnership, then this Friday with Qualcomm trying to buy them out. Now it looks like we're going to have Robinhood open up the overnight trading in about 11 minutes. Maybe Intel gaps up a couple percentage points. Why? Because Apollo Management, private equity firm, might want to dump in $5 billion into Intel, which would be $5 billion added to the balance sheet. I mean, it would be a lot more cash for them to do some work with, so that might not be the worst thing in the world. So we got to talk about that. Got to go through all of the implications of what that means for Intel. We have some macro data this week. Not that much macro data, but there is some macro data that we have to talk about that will be important. First week of October is going to be much more important for the macro, especially because we'll have CPI. We do have PCE coming this week, which that is important. So we'll talk about that. And then we'll talk about Palantir. But we'll start with Palantir first because I know we've got to discuss Palantir's upcoming week as well. Davis, Gene, Patrick, Matt Money, what's up? What's up? Matt says IDK who Amit thinks he is, but he was more late than my last ex-girlfriend. Okay, nice to know. Thomas, what's up? Elizabeth, Kaiser, he's such a good debater. He was debating if he should show up tonight. It's not my fault, dude. It's StreamYard's fault. I'm telling you, it's StreamYard's fault. Katie, what's up? JP, Arun, Herbert, Walt, Vibob. Thank you, everybody, for being here today and joining me on a Sunday evening. A couple things. So we have that Farzad podcast. If you guys didn't watch it, I posted it on my Twitter. It's also on his channel. So if you just go to his channel, Farzad on YouTube, I'll pop up there. So it was good. 90-minute podcast. I think a lot of people liked it. A lot of people enjoyed kind of diverse perspectives of Palantir and Tesla and what they mean together. So check that out if you haven't. And yeah, we will get started going through everything we've got to go through for today. Okay, so I think we'll start off with Palantir. Let's start off with Palantir. There's a couple different things going on with Palantir that I want to talk about. First of all, the volume on the Friday night close was pretty incredible. And I guess I haven't been through a scenario where a stock I own is getting included into the S&P 500 ever, to be honest. I mean, Tesla back in the day, but I didn't really own a ton of it. So I didn't even know like what it meant to get included into the S&P 500 back in 2020. So I didn't really understand like how volume interacts and everything. But this one was special. I mean, we had 450 million shares traded at the close. So we traded 50 million for the day. So call it 400 million shares were traded. Palantir ended up about 1% on the day, which was basically leaving it to be up 118% year to date. Again, just incredible in terms of what price action we saw for Palantir. Now, the thing that's really, really interesting about this is that none of us kind of knew that this would happen in terms of the level of volume that would take place. But also, we didn't know that it would gap up right there on that little candlestick a bit higher into the close. The question now for Palantir, and I want to look at the technicals on Palantir along with some of the insider selling on Palantir, is can it maintain this $37 range? And are we poised to go higher on this 37 or basically hitting, that $40 level, which I think is very psychological, or do we have a bit of a pullback? So a couple things going on. First, let me share this picture because I know a lot of people have been tagging me in this, and this picture is freaking out a lot of people. I don't think it's that scary, but it is what it is. So this is Alex Karp's insider selling over the past basically year and a half, call it 18 months. And as you can see, pretty much all the sales starting May 2022, or sorry, May 22nd, 2023, when Palantir was like $7, $8. As you can see, he was still selling hundreds of thousands of shares because his average is in the pennies on these shares because he was granted these shares. So, he was selling, and then these two sales of about 4.5 million are 20x larger than what he has sold in the past. So a lot of people are thinking, hey, Karp's kind of putting his foot on the ground and selling so many shares, as you can see right here, $325 million worth of shares, that it is a bearish signal. I went in depth and talked about this on Friday. We also talked about this on the Palantir Weekly episode. I highly recommend people watching that. I also clipped a piece of that episode where we talked about selling and if it's a good thing or a bad thing to sell, because someone messaged that they're up a lot and they're thinking of selling. And my thoughts are very simple. I mean, there's not that many complications to it other than Palantir's up 100% year to date. And because they're up 100% year to date, you're going to have a CEO taking profits. So 5 simple arguments on the selling of stock. It's up year to date, not because of memes or roaring kitty. It's up because of execution. So, people are going to sell, especially insiders, if a stock is up that much. Karp has vested these shares for decades. He deserves to get liquid. I don't think that's really arguable. 3, these shares are exercised for stock options. Yes, he's taking profits, but also he has to cover a lot of taxes because obviously you're selling a lot of stock, which means there's a lot of capital gains. 4th, I think this is the most compelling argument. This is what I keep telling everyone that keeps saying, hey, this is bearish. I'm like, you can sell too. It's not a bad thing. If you have 5,000 shares, you can sell 10% of your stake, sell 500, just like Karp sold 6 out of the 60 million or 9 out of the 60 million, whatever is 15% of the stake. And, you can sell with him. You can position size and risk mitigate with Karp. You don't have to. It's not like he's selling at 36 and now the stock's at 27 and you missed your opportunity. Nope. The stock's higher than when he sold. Like you're actually getting a better exit price than Karp if you really want to sell as well. So I think that's like the most compelling argument for people that are worried about this. And then finally, I do think Karp selling $325 million worth of stock right here is basically him saying, yeah, I think we're a little stretched right now. And that doesn't mean the stock has to go back to 25. That also doesn't mean the stock can't go to 40. But it is an obvious sign that Karp's saying this is a great exit opportunity for 9 million shares that I have. And he's taking advantage of that. And I don't think that's a bad thing, especially if, you're kind of signaling to the market that historically the stock has been overvalued and undervalued, but you are going to take advantage of it and continue growing regardless. I think insider selling is part of the equation of any company you're in. You can't own any stock if you're afraid of insider selling. And Palantir's up a lot this year. And because it's up a lot, you're going to have people take profits. And because you're going to have people take profits, it might be a short-term top, might be just him taking some money and the market wants to go a lot higher. And it is what it is. I mean, we saw this with Peter Thiel. Peter sold like 30 million shares at $23. I mean, if he had waited, he would have made $14 extra on 30 million shares. It kind of is what it is, right? And maybe Palantir's $50 in the next few months and Karp had a sale that he would have made $13 extra on, or maybe Palantir's back to 25 and he actually had good timing. No one really knows, especially after you've been in the company for 20 years. You kind of just have to go along with it. And I think that kind of sums up where we're seeing with Palantir and with Karp selling. So another thing that I got right here, a couple things I want to show. So first is the technicals. This is a guy named Jake on Twitter that is a bit respected in the technical analysis area. And here is him showing the volume shelf resistance setup on the daily candle chart. We would have to get through this 37.20 to 37.50 range. Once you're above that, I mean, as you can see right here at 38, 39, 40, there's not really a lot of volume. Why? Because we have not hit those levels in over 3 years. So if somehow we open on Monday or over the next couple of days, whatever it is, and we're above 37.20, this is a playground from 38 to 40. And from what I understand about TA, when there's very little volume self-resistance, there's a lot of price discovery. You get a lot of buyers stepping in. There's a ton of FOMO that steps in at that moment because now stocks are really running and you kind of think, oh my God, I'm late to the party. You stop caring about valuation or any of the fundamentals. And things can get pretty exciting. Another thing that could happen is we get rejected heavily in this range and we fall all the way back and kind of consolidate from this 33 to 37 range, which I think is probably healthy. I think that is very likely. But I also think if the momentum's there and the excitement is there, then maybe we can push higher, which wouldn't be the worst thing in the world. Bayray says there's another Jake chart. Bayray, can you send it to me? Oh, no. Do I have it? Oh, yeah, here's the one. Here's the one I was talking about. Okay, so this is another chart by Jake. So this is the breakout chart that he thinks is possible, not only based on volume shelf resistance, but based on all the higher highs that we have been hitting. And as you can see right here, the trend is very much intact. And it's not just him. If you type in Palantir technical analysis on any account that you see on Twitter, pretty much all of them unilaterally believe that this chart is headed in the right direction. And they've been right so far. I mean, most of these guys have been saying since 27. There's another one called Shardy B. They have like a 200,000 followers, very big crypto person. They're not even into stocks that much. They're mainly crypto, but they bought a crap ton of Palantir at 26, 27 because that chart kept looking like it was going to hit a breakout phase. So at this point, again, based on Jason's teachings on Technical Tuesday, a stock can run without caring about any of the fundamental valuations for technical purposes. So Palantir at $40, does that valuation make sense to me? No, it really doesn't. But the technicals are the technicals. And if it wants to go higher and if the momentum's there, then that momentum can push it higher as well. I will be having Chris Camillo on the channel, the guy who was on Dumb Money. I got to message him over the weekend. I believe our tentative date is Tuesday, 10:30 on the market open. So Tuesday, 10:30 on the market open, we should be having Chris Camillo. Again, this guy's an absolute legend. If you don't know him, took 20,000, turned it into 60 million, like legitimately, all through this idea of social arbitrage and trading on stocks before they were popular. So as you can see here, right here on September 20th, he tweeted, "Not afraid of Palantir's high PE, not even a little." It was funny in the comments. Someone says, "What do you think about their balance sheet?" Chris is like, I haven't read a balance sheet since I was in college. And so this gives you an explanation of like who this guy is. He's a momentum-based guy. He's betting on trends. He's really bullish on humanoid robotics. And he thinks humanoid robotics is going to be a multi-trillion-dollar industry. And so he's betting on the trend, not betting on the internal idiosyncratic price to earnings, price to sales metrics that I do think matter. It's not like they don't matter. It's just if your long-term trajectory is, 10 years, then they really kind of don't matter, right? Even if you're sitting on some dead money and you have to deal with a 50-40% pullback, they don't matter because the trend is in the right direction if you're correct about the AI thematic and then Palantir's ontology kind of being the central portion of that. So he'll be on the show, and I think that'll be a fun episode, and we'll get his thoughts as well about what's happening with Palantir. Sasky Rose says, "Amid, I'm thinking of selling 30% of my Palantir shares to buy a dump truck of mayonnaise. Looking for your thoughts." I would advise against that because I think we need less mayonnaise in the world, and selling Palantir for the mayonnaise, I think, is just not the right thing to do. But to each their own. To each their own. That conversation we had on the podcast about the guy who wanted to sell 30% of his shares to buy the cabin in Kentucky, I think a lot of people are dealing with that same situation, right? I have gotten so many messages, by the way. I should show you guys this post. Shout out to Bay Ray in the chat. He posted this over the weekend, and then we'll move on to some more macro stuff about Palantir. So he said, "Buying Palantir as a 20-year-old in the Army was the best decision of my life. Thank you for your service, Bay Ray. I just recently turned 23 this month and have been reflecting on my Palantir story after I heard Alex Karp address shareholders after the S&P 500 announcement. Quote, people tend to use the term retail investor, which is another way of saying people courageous enough to invest their own money, otherwise known as tendies, in what they believe in. I am very blessed to have had the ability to grind with my blood, sweat, and tears at that age to put multi-five figures into the stock with a $10 average. And now he is financing a Tesla, and he's going to be compounding his portfolio over the next really 30, 40 years. And he got to start buying Palantir at 20 years old. So this, to me, this story I thought was so interesting today, because these are the types of stories with retail investors that I think make Karp so happy. I cannot tell you guys the amount of DMs I'm getting, like quite literally multiple DMs of people that are not focused on the markets all day. They're not professional traders. They don't have a ton of disposable income to just dump into stocks here and there. They work regular jobs. They have income from their paychecks. They have to pay off expenses, and the rest of the money they have, they put into the stock market, and they at $7, $8, $9, $10, $11 put a lot of that disposable income into Palantir. And obviously the investment has worked out really nicely. So, to me, individual investors who Karp describes as people courageous enough to invest their own money, even that statement right there is so philosophical to me, right? It's not just being a retail investor. It's being someone who has the quite frankly, the balls to say, you know what, I'm going to decide my financial future. I'm going to do the digging. I'm going to do the research. I'm going to watch this Indian guy on YouTube for 5 hours a day trying to figure out if he's actually right on this thesis on Palantir when the stock's at $7. I'm going to put in the work to figure this out. And I'm going to outperform the S&P 500, pretty much everyone, because if you bought Palantir at that $6 range, you're up 600%, right? And if you bought at $10, you're up 300%. You are massively outperforming the market. So the best part of this story is that given he has a $10 average, even if he has a 50% retracement and Palantir goes to $18, he would still be up almost double on the investment. And this only happens when you buy something so discounted because the rest of the world basically gave up on it. So the point of me bringing this up is that as we hit $37, I think it's very exciting. It's really important. There's a lot of momentum there. But the most important thing is that a lot of retail investors are going to be okay, even if the stock has a decent pullback, 20, 30%, maybe 50% if like anything crazy happens. But 20, 30% I think is reasonable if they, that could happen for any random reason. People are still going to be up a lot on their shares. And I think now people have such a high margin of safety, not the new people that are jumping in, you bought in at 35, 37, stock might go below that average and you're bag holding at that point. But for the people that were there for a while, I think it's one of those stories where you just sit back and chill. So on the question of, hey, should I start selling because I have so many gains? My perspective is if you're really in the money to do something important, then of course it's always good to take off the top. But if your average is so good, your margin of safety is so far away from even a 50% retracement, like the guy who messaged me that we started that conversation on the podcast, he has a $12 average. We fall 50%. He's still up 70%. If Palantir was $18 given his $12 average. It's one of those things to think about, hey, 10 years from now, will this $12 average really help me over the long term? And not just the $12 average, right? Because the average is irrelevant, but the amount of shares you have and the level of the margin of safety. Because if Palantir was, $100, if you have a $20 average, that is still a nice margin of safety, even if you don't have a $12 average. But it's based on how comfortable your cost basis is in comparison to a future drop. And I think all of us realize, yeah, there could be a future drop. Like it's getting extended. We just saw Carp sell $325 million worth of it. But if we don't have that massive drop, maybe holding on to these shares with long term is better than scratching the itch of selling anytime soon. The other thing is also you could just sell covered calls, and that's not the worst thing as well if you really want to get some income on it. I'm going to put Bay Ray's Twitter in the chat. Everyone make sure to check him out. Again, he's young. He is serving our nation, and he is getting into the world of investing and content. So I just love this dude. I love seeing people who are young at this age put money into the markets. I know a lot of you think I'm young as well at 26. I'll be 27 in a month. But people starting literally in their teens going into their early 20s, it's not easy to do. You have to avoid all the distractions and actually give a shit about the stock market. And that's just not easy for most kids who are that age because they just don't care about it that much. But we need more people to care about it that much because we need more money in equities that are compounding over a longer period of time. I'm a big proponent of Brad Gerstner's plan of giving every kid who graduates their mom's womb, but who literally, as soon as they're born, $1,000 in their Social Security account, in their brokerage account, tied to their Social Security number, and let that compound over time. By the time they're 30, they'll probably have close to 50, 60 grand, which is a big deal, for someone who's 30 years old or even 25 years old. And it teaches them more about financial literacy. So I think that's an important thing. And we got a lot of people finding that momentum from Palantir as well. So that's what we got on Palantir. Overall thoughts, I think that selling right now, it's based on your risk tolerance. But I do think even if we have a massive downturn, because a lot of people have good averages, you'll be able to withstand that. Number two, I think covered calls are not a bad thing. Selling covered calls at 37.40, expecting it to go back to 30. Could you get caught on those covered calls? Yeah. Given how much we've ran up, I think the probability of getting caught is low, but I could be wrong. I didn't expect it to go 37. So that, it could go much higher. And then third, in terms of carp selling, I think it's a no-brainer, and it's ultimately not that big of a deal. Graduates from their mom's womb. That was smart. You see how I spin that on the spot, dude? This is what I do, bro. This is what I do. I was able to put that in a different direction. Okay, cool. So let's talk about Intel, because now we got to move on from Palantir. Are there any other crazy questions on Palantir or anything? I think we discussed pretty much all of it. We talked about carp selling, talked about the technicals. The technicals look good, dude. I'm not going to lie. Going to $40 makes no sense valuation-wise, but the technicals to 40 look phenomenal. Again, I'll share this picture one more time. It really looks good. It does not look like it's a bad technical setup. So if we avoid a recession, which we'll get into that discussion as well after Intel, then could Palantir melt all the way up to 40? I think it's very possible. Would the valuation make sense? Absolutely not. Could it happen? Yes, that absolutely could happen. Oh, it's 8 o'clock. We didn't even look at the overnight markets. Okay, so let's look at the overnight markets and then move on to Intel. Amit, why do you look so angry? I don't know. I did get a haircut. Is my eyebrows leaning in or something? Is that what's happening? In your opinion, where do you see Palantir in 10 years, Amit? Look, that would be what, 2030? My long-term target has always been 250. The more and more I look at the company, that puts it at $500 billion market cap. The more and more I think about it, I think $1 trillion is possible. I think you need a consumer product to get to $1 trillion, but if there's any company that would get to $1 trillion without a consumer product, I do think it's Palantir. So I don't know if it's $1 trillion in 10 years, but long term, dude, I think I think it's and you know me, I'm pretty conservative when it comes to Palantir and valuation. I've not been the guy touting $1 trillion. I just think more and more and more, if OpenAI is worth 150 billion, if Nvidia is going to 5-6 trillion, if all these GPUs only matter because of software and software applications in the enterprise are what is where the value is unlocked, do I think it can get up to that $1 trillion range? Yeah, I think it's possible. That's my long-term target. So long-term target is $500, but I would say it takes 15 years to 2 decades to get there. Okay, what do we have on Robinhood? So Robinhood stock $22.79. Robinhood's up a little bit. Palantir is down about 0.5% at 37.01. S&P at 568. That's green. IWM 222. QQQ at 482. I have an interesting stat about the S&P 500 that I think a lot of people are going to be liking, especially if you're bullish. Nvidia 116. That's green. Snowflake 110. GameStop $22. GameStop was up 12% on Friday because someone bought $42 million of it, or no, $92 million of GameStop, something like that. So that's what GameStop was up. SoFi is at 807, SLG 71.99, Palantir 37, Coinbase 171. Bitcoin, we'll talk about that. Bitcoin fell right at 6 p.m. Then it swooped all the way back up, had a nice recovery. Now it's at 63,200. Tesla's up about 0.5%. Amazon 191, Shopify 79, Apple 228, Netflix 700. Netflix closed at 700 on Friday, which was interesting. Dell at 117. Yeah, not really any movement on the after hours or on the overnight trading charts. Kind of basic. Nothing too crazy there. Okay, cool. Intel. So let's talk about it. Oh, where's Intel? Let me check on Robinhood. If Intel's up a couple of percentage points, maybe tomorrow they're going to have some fun. Yeah, look at Intel up 5%. Comeback kid of the century, baby. If Intel comes back, they're the comeback kid of the century. So what's going on with Intel? Let me know in the chat if any of you have been buying Intel. I know a couple of you have been buying it. I have not pulled the trigger on Intel. I still think there's a lot of doubts on it, but they've had a pretty bullish week in terms of pieces of news. So Apollo, which is a private equity firm, is thinking of putting $5 billion into Intel. The investment firm offered equity-like investment in the chip maker. The move comes as a rival Qualcomm makes the approach about a takeover. So in the past week, Intel got $3.5 billion from the U.S. Army to make chips. That's bullish. They announced a partnership with AWS to advance U.S.-based chip manufacturing. That's bullish. And then they got an offer from Qualcomm for a buyout, which is also super bullish. I don't think Qualcomm's going to buy them out, but I think it's bullish for the fact that they're even thinking of doing this. Intel's down 54% year to date. They were a $190 billion company. Now they're a $90 billion company. However, they are one of the only companies trying to push chip manufacturing in the United States. They've just failed to innovate like NVIDIA and AMD in the chip business over the past couple of years. If Apollo was to dump $5 billion into them, it reminds me of Volkswagen putting in $5 billion into Rivian. That deal might not be happening anymore based on what happened on Friday, but Rivian went up 50%. They went up from like $11 to $18, some crazy move. It didn't sustain that level, but it went up on that news because you just added more cash to the balance sheet. I think this is bullish. I think Apollo is going to bring in a lot of people to try to help figure out what's going on with Intel's business. It at least will give some guidance to Pat, the CEO of Intel, to try to figure out how to navigate, maybe split up the foundry businesses, maybe kind of sell off some of the foundry businesses, whatever it may mean. Intel has, I think, 15 fabs, and if you value each of them at $10 billion, which I think historically is where the multiples round out at, that's a $150 billion company. The company's trading at $90 billion. So already there's a $60 billion delta on the assets they have right now. Investors just need to believe those assets are going to be worth something and that there's going to be productive returns from those fabs. So I think this is bullish. I think more and more good news is compounding for Intel. I am still worried about if they're going to be able to have the maneuvering necessary to convince investors that this is the right path. I also would rather own NVIDIA over Intel, even at these valuations. But if you own Intel, I don't think you could say this is bearish. There's no way I think you can say that this is bearish. Arun says, I bought Intel at 19 because of Steve. Funnily enough, I called Steve yesterday and he was so excited about the Qualcomm thing, not because he thinks Qualcomm's going to buy them out, but because he thinks like, hey, this is bullish at the end of the day for the broader thesis of the company and for other bigger players recognizing the value that Intel has. He's thinking of dropping a lot more money than he currently is into Intel, simply because of the AWS thing. That's the thing that really got him excited. Look, my belief is that if we only have one company in the United States that's really manufacturing chips, and that's Intel, then the US government's going to try to save them. And if Apollo gets involved, Qualcomm gets involved, AWS gets involved, you have a lot of third parties that are trying to prop it up because they know that, the days of manufacturing chips across the rest of the world might be numbered, just given China and Taiwan. And even if it's not numbered, that we have to manufacture our own chips in the United States. So I think that's bullish. I don't know if it's a buy yet. I think Intel has been known to fuck things up really easily. So I'm not dipping my toes in, but if you own it, I don't think it's one of those pumps where you take advantage of the pump and then you sell. It's one of those things where maybe you take some off the top, but if you want to own it for the long term, everything that needs to start happening is happening. And once they have a legit plan and they accept a legit partner, whether it's Qualcomm or Apollo, they're going to have more money, and more money will allow them to do more things. And they got rid of the dividend, which is, bad for shareholders, but it's good for their savings on costs, which is ultimately good for their bottom line EPS growth. So that's what we got in the context of Intel. And what do you think of the company ServiceNow? Ticker symbol now. They have some similarities with Palantir. ServiceNow is a very interesting company. I haven't done a super big deep dive into them. Yes, they do have some similarities with Palantir. I think they're the company that gets the most amount of IT spend, if I'm not wrong. Wow, it's at $937. Yeah, they were down a lot year to date. Then they had a massive quarter 2 months ago, not even 2 months ago, like 3 weeks ago, and they smashed expectations. So now year to date, they're up 36%. You could see at one point they were at 643. So they got killed. They started the year at 687. They were at 643 at one point, right? So they had pretty much a flat year. And then that last earnings really got them some more momentum. I don't know enough about them to do a proper comparison with Palantir. But they do have some level of an AI thematic helping them. I think, what's his name? Frank Slootman used to be the previous CEO of ServiceNow before he left for Snowflake. So he kind of set them up over the past couple of years and then he left. But it's something that I got to go a little deeper into. Every time I look at a SaaS company compared to Palantir, the number one question I ask myself is this SaaS company going to be one of the premier operating systems for multiple industries? Like, that's the way I kind of dumb it down for myself when I'm doing the comparison. And if I can't think of them as a premier operating system for multiple industries that hasn't really exploded yet, then it's hard for me to think that there is a level of alpha in other SaaS names outside of Palantir. And again, I'm biased, obviously, because I've studied a lot about Palantir, and ServiceNow could be a great company. But if I don't see that vision, then for the long term, it's a little tough to think that it's better. And then it gets into valuation, and I'll look at their valuation as I dive deep into them. But that would be my analysis of that in comparison to Palantir. Luke for a while says, I've used ServiceNow for the last 7 to 9 years. Absolute shit software, but pretty much a monopoly. That's what I've heard as well. I mean, I've heard this about a lot of software companies, that a lot of times the software is shitty, but like I've heard this about Salesforce all the time, but they have a monopoly. And when you have a monopoly, it's really tough to get rid of them from the organization. Although AI might potentially be the thing that starts catapulting some of these companies to realize they don't need some of these broad-based software applications. It's just really tough. If you've been using CRM for 5 years or 10 years in your organization, to get rid of that when it has all of your customer relationship data, it's not easy. It's not easy to just get rid of that. And that's why, these are good businesses that have recurring revenue, but they're just not growing on the top line, aka Salesforce, 7-8% a year. Investors want closer to 14-15%. But if Mark Benioff's right about these AI agents, maybe that's what gets them there. Amit, have you done any DD into Rocket Lab yet? I know you mentioned you were becoming interested previously. So I'll answer this and then we'll get into some macro, but that's the conversation on Intel. I am getting a lot more excited about Rocket Lab. I haven't done full DD yet. Like, I can't really explain what's the thing you guys call it? Neuron? What is it called? It starts with an N. Neutron? I can't really explain what Neutron is yet. So I haven't done that level of due diligence, but I like it because at its core, it feels like, I don't know. At its core, it feels like, can you guys see my screen? See it? No? Okay. StreamYard's being weird. You guys probably can't see it. At its core, it just feels like a company that has a TAM that is exciting. And that TAM obviously is space. I don't care too much about space, but the more I see SpaceX execute and SpaceX get these crazy deals, you would imagine that companies like Rocket Lab would catch a bit on top of that. Okay, StreamYard's being stupid now. It's not letting me share anything. So we'll have to give it a second. But yeah, I'm getting more excited about Rocket Lab. Unfortunately, haven't, really, really deep dived enough to take a position that's aggressive. But I don't know, dude. At $3 billion market cap, it does look kind of silly to not have some in the portfolio over the long term. Also, the thing about Rocket Lab that I really like is that there's a founder. So my philosophy on investing is starting to boil down to best in class product and founder. Like, I really like a founder running the company. and I really like best-in-class product. I know best-in-class product is subjective, but the point is like, hey, is this product one of a kind? And then is there a founder that's running it? And so far, Palantir and Robinhood have fit that thesis, and it's worked out. I don't have a big position in Tesla, but I think Tesla fits that same thesis. Best-in-class product, and then you got a founder. Even if the founder sometimes goes off the rails and people hate his political takes, it is a founder at the end of the day. And so Karp and Vlad have played out that thesis for me. I think George Kurtz with CrowdStrike might be another person that fits into that thesis. And then Peter Beck, look, I like the guy. I like him a lot, and I think he's been through hell trying to build Rocket Lab. And Rocket Lab is not best-in-class product in comparison to like SpaceX, but in comparison to all the other space companies, I feel like Rocket Lab has a substantial advantage. Over the past 3 months, it's up 56%. So, I mean, if you bet on Rocket Lab back when it was $4 or $5, shout out to Matt Money. I know he's been talking about it for a while. Then you've done well so far. I just don't know enough about the financials, dude. I know they diluted a couple months ago. I think they're going to be profitable in a couple quarters. I don't know if $3 billion is cheap. Long term, I think $3 billion is cheap, but like, is this entry price an amazing entry price? I don't know. So I got to do some deeper research on that. But yeah, I'm really warming up to making Rocket Lab a position in the portfolio, at least of 1,000 shares to get started. And then in the future, I don't know, probably get this to 5,000 shares. That's not that crazy. If I can get them under 7, that's about 30 grand, and just like let it ride over the coming years. And just based off the fact that I'm not going to buy the SpaceX IPO. Like, I'm not buying that at 500 billion. Like, that's going to be a crazy IPO. A lot of people are going to make a lot of money. I am not going to make a lot of money because I just wasn't in SpaceX early. But I feel like Rocket Lab, if that's anywhat of a proxy to SpaceX, then that should create some decent momentum. Okay, so guys, give me 1 minute. I'm literally going to refresh the screen because StreamYard's not letting me share anything. So I think when I refresh, I'll be back. So it'll be a black screen for like 10 seconds. I'll be right back. Okay, and I'm back. Can I share my screen? Yes. Do you guys see this? The browser can't access your screen. Well, you know what we're going to do? We are going to go to my second screen, and we're going to try to opening it from here. That's so weird. I don't know why it's not doing it from my Mac. The link to the Palantir merch store is store.palantir.com. Store.palantir.com. Why no ad during the break? Could you guys imagine if you had ads during the break? Could you imagine if a Mayo company wanted to advertise? That would be funny. Okay, so let's move on to macro. So we talked about Intel, talked about Rocket Lab, talked about Palantir. We've got some macro things to discuss. So let me see if I am able to easily share from my second screen. I think I should be able to. We'll talk about Robinhood as well. Some interesting stuff over the weekend on Robinhood. If this works, I should be able to share. Can I share? Share. Yep, there we go. All right, second screen is working. Cool. So let me zoom into this. There we go. Okay, there we go. Not bad. That's what we got, 2 screens. So let's get through a bunch of different macro charts and go through there. Goldman Sachs sees 130,000 to 140,000 jobs being created for the rest of the month. For every month for the rest of the year. I really like that. I mean, that's pretty bullish to me. Remember, we had 114,000 in July. Then in September, we had 142,000. That was lower than the 160,000 expected. I know those were revised, and I know people don't believe it fully. But if we end up with 130 to 140 for the rest of the year, that's bullish. Now, will you believe it's 130, 140? I don't, we'll see what the BLS says. But that is bullish to me. And for everyone saying in the recession camp, saying, oh, we're going to have way less jobs. If Goldman Sachs is right about this, that is pretty much in line with what we need. If we were adding less than 100,000 jobs, I would agree unemployment's going to tick up closer to 5%. That's not happening. 130 to 140 is very reasonable. And I think if we keep 130 to 140, that is going to be a good thing as well. So that's the first piece of news that I thought was really interesting in the context of where they see jobs reports. Another thing I wanted to show right here is the current cash on hand on a variety of companies that exist along with Berkshire Hathaway. So Berkshire, who sold another $900 million of Bank of America on Friday or late Thursday night, they now have $277 billion in cash. Google has $101 billion, Amazon is $89 billion, Microsoft $76 billion, Apple $62 billion, Meta $58 billion, Tesla $31 billion, Nvidia $31 billion. So these guys have a lot of cash, and they have a lot of cash ready to deploy. Now, why am I bringing that up? Well, we're coming into Q3. And Q3, I think we're going to need some substantial earnings to beat back against some of the expectations that we have. Now, remember, S&P 500 Mag 7 expectations are already lowered by about 2%. S&P 493 have been raised higher. The mid caps, so the S&P 400, they are expected to grow at 11% this year for Q3 and then 14% next year, along with rate cuts coming that are going to decrease the cost of capital. So you've got the other companies in the S&P 500 outside of the Max 7 that can do well. What does that create? Well, that creates opportunities where people rotate out of the Max 7, aka sell off some of their stocks to go into other companies. We'll see a little bit of a broadening out, but that'll also create some juicy prices for those companies to take the cash that they have on hand and start buying back even more of their stock that they're already buying. So I think that is bullish for the broader market, even if you see the Max 7 kind of slow down a little bit in terms of the gains that they're having. Tom Lee, here's what he said on his Sunday note. FOMC day has come and gone, and the Federal Reserve has put an official end to one of the most aggressive hiking cycles in Fed history. Before the Federal Open Market Committee concluded its meeting on Wednesday, market participants debated whether the Fed would decide to cut by 25 or 50. The Fed picked 50. Tom Lee says that Chair Powell mentioned recalibration multiple times. This was this word that was used many, many times during the conference. To me, this indicates that the Fed has shifted its focus to the other part of its dual mandate, keeping the job market strong. With inflation softening, it seems clear that the Fed wants to keep the economic expansion healthy. Expanding on that, he explained this should arguably act as an implicit put on the equity market, as falling asset prices would threaten to weaken labor markets. Basically saying, hey, the Fed doesn't only care about inflation, they care more about the labor market, or at least they're caring in the 50-50 range of labor market and inflation, which is where I think they got 50, 25 for labor, 25 for inflation. And then boom, that's how you get your rate cut. Now, the last thing that he says is all of this is arguably most supportive for small caps and cyclicals. Yet Tom Lee warns clients to expect noise and trading activity in the near term over the weeks to come. This is in large part because markets are historically challenging in the 8-week period before the election day, which we're basically starting off, or I think that we've been in over the past 2 weeks, particularly when the contest is closed, as is currently the case. Obviously, it seems like Trump and Kamala is going to go down to the edge, and maybe it's a landslide for one of them, but it seems like it's going to be pretty close. So our boy Tom Lee is pretty bullish on the fact that we did 50 bips, and I think 50 bips does matter, and here's a couple of reasons why I think 50 bips matters. But he's also a little scared that there's going to be some election volatility, and I think that's going to be a buy the dip opportunity if we avoid a recession. If we don't avoid a recession, that dip can turn into something worse. But Tom Lee basically says, hey, be cautious, but still be in these markets at the end of the day because 50 bips matters. So here are my thoughts on 50 bips. Number one, we needed 50. We'll likely get another 50. This is great for assets like Bitcoin. We'll talk about that in a second. And for growth stocks, that's bullish. 2, retail sales data is strong while initial jobless claims came at a 4-week low. While more data can come out that could be bad, it seems like the current data is strong, and 50 bips now and another 50 bips is only going to help businesses and consumers, especially the S&P 400. That's bullish. 3, everyone felt the pain of their 5% APYs this week. I know I felt it on Robinhood, going to 4.5%. Either people are going to accept a less return or allocate that capital into assets like cryptos and equities. That's bullish. We saw $20 billion leave money market funds for the first time in 5 weeks, already starting the decline of assets going into money market funds. Second or fourth, valuations aren't crazy to me. They're really not. Some stocks are getting stretched, but even companies like Google are trading at 21 times next year's earnings. NVIDIA has been stuck from 100 to 120, kind of consolidating in that range. If NVIDIA stays in this range after another earnings, their PE for the forward year is going to go down to 25 instead of 40, which is going to be nice. We aren't seeing massive multiple expansion in the Max 7 outside of Apple and Microsoft, which I don't really understand why, but still, which is allowing the other 493 stocks to gain momentum, meaning we are seeing some broadening. And then my final point here, and so my question to the chat, which was my question on Twitter, are you more bullish or bearish for the rest of 2024 now that we have 50 bips? My final point here, kind of what I mentioned on Friday, is that every comparison to 2000 and 2007 are all lacking the explanation of what is a bubble that is going to pop, like the dot-com bubble or the housing bubble. I don't see what that bubble is. You can say some companies in AI are overvalued. We made the joke on Friday that Palantir is one of those AI companies that's pretty overvalued. You can say some of the data center companies are valued. By the way, CEG, Constellation Energy, they were up 30% on Friday because they signed a deal with Microsoft for $30 billion to build out new data centers. You can say these things are too cyclical. You can make all those arguments, but to make a broad sweeping claim that AI is a bubble, that none of these LLMs matter, that ChatGPT is fake, even though they have 200 million weekly users, that all the money NVIDIA is getting is fake. Like, I think that's just naive, and maybe there's an argument where it could be correct. But if there's not a bubble that's undergirding the 2024 US stock market like it was in 2007 and 2000, and we avoid a recession, aka we just don't have massive unemployment, GDP growth doesn't necessarily stop, I don't see where the recession comes from. I really don't. And so I'm curious what you guys think. Are you bullish or bearish after the 50 bips? I can't help but think that another 50 is going to be bullish. And that's what we're seeing with Bitcoin. I mean, Bitcoin today, interestingly enough, Bitcoin fell from 63 to 62.5 right when the futures came out. Futures were relatively flat. And then after that, Bitcoin just recovered right back to that 63 range, tried to make a run for 64. Now kind of chilling in that 63, 183 range. What's interesting about Bitcoin to me is that this is the first week where it's like been actually navigating a $63,000 or 60,000 plus world without being stuck in the 57s and 55s. Now, maybe if Trump loses, the market hates that, and then boom, Bitcoin collapses. I am quite afraid that Trump could lose and Bitcoin could collapse because the market could have such a bad reaction to it. But on the other hand, when you have more liquidity and you have more money willing to go into asset classes, whether Trump's the president or not, I don't know if it's going to stop the train from going further. Another important thing about Bitcoin is that it is now, I think, 2 weeks away from getting to the 170th day after the halving event. And historically, if you look at the halving every 4 years, once it gets to that 160, 170 day range, that's when it starts to just take off. I don't know why. That's just what happens after 170 days. Basically, after a quarter and a half after the halving, you start to see that momentum, or 2 quarters, basically 90 days, 180 days. So maybe that's the case. I don't think 50 bips could be any more bullish, along with the fact that we're probably getting another 50 to 75 bips. That is only going to be good for Bitcoin. I don't see the bear case for Bitcoin outside of a recession or outside of the yen carry trade coming back and then Bitcoin collapses because people have to sell off Bitcoin. I think people are risk on. Retail has not started trading Bitcoin yet aggressively. Maybe we'll see that in Robinhood and Coinbase's September numbers, but their July and August numbers showed that retail has not been back. But I do think that there's going to be some more momentum with Bitcoin as retail gets excited that they have more liquidity. And obviously, if retail sees the price go to 70, 75, that's when retail is just going to jump in. That's historically what happens every time. Another big piece of news on Bitcoin, which goes back into the rate cut thesis along with the ETF thesis, is that on Friday, the SEC approved options on Bitcoin, which is just crazy to me, dude. Anyone saying this is bearish is out of their mind. There's no way this is bearish. So for example, if I were to sell 100 cash secured puts on IBIT, which is the BlackRock Bitcoin ETF, and I'm assigned, I have to buy 10,000 shares. Those 10,000 shares have to be bought. Either it's today, either I roll it into the future, either I buy to get out of the contract. Somehow there is going to be an application of those shares switching hands. And that simply means that if people are willing to dive into contractual obligations on the put and the call side, on IBIT, on ARKB, on FBTC, on all the other Bitcoin ETFs, we are going to see a lot more money on to the ETFs and then eventually onto the underlying, because people are going to have to buy those shares if they're engaging in options. Even if they're in the derivatives market, it will derive back down to the underlying asset. Now, the underlying asset is not just the ETF. It is actually Bitcoin, because if you have more inflows into the ETF, they have to buy more Bitcoin. And so I think that's really bullish. I think that's coming at the best time ever. I don't know when it's going to start up. Hopefully it starts up like soon. I mean, like hopefully it starts off in the next week, dude, because I think the premiums on that are going to be ridiculous. And you won't have to use some of the leveraged tools like BitX or the miners or whatever to get exposure to alpha and derivatives on Bitcoin. You can just use the ETFs themselves, which I think is going to be very attractive to people. Right now, people are basically using MicroStrategy as the way to get there. But I think if you could do IBIT, people would not be upset about that. Palantir right here, 37.11 on Robinhood, and Robinhood itself, $22.80. QQQ is up a little bit, 483, IWM 221, S&P 500 569, Nvidia at 116.79 on the overnight trading. Tesla 240.40 as well. So I think that's bullish, and I think that's overall bullish for the broader market as well. Now, some people are saying, okay, well, rate cuts aren't going to matter so much for consumers. We'll talk about Robinhood in a second and some of their announcements. I have a theory on what they're going to be announcing in October that some of you guys probably haven't heard of. It's not my theory, it's someone else's, but they messaged me about it, and I thought it's a pretty crazy theory, so we'll talk about that. Some people are saying, well, if you get rate cuts, the consumer isn't helped immediately, right? Or businesses can't get help immediately. That is fair, but I think that's missing the macro perspective. So a lot of people that are bearish on the consumer right now are essentially saying, well, people are strapped for cash. Personal saving rates are at all-time lows, and credit card debt is very high. By the way, let me give a bearish piece of chart. Let me show a bearish chart right here, because we show the good and the bad. Credit card debt is an issue. It is absolutely an issue. I think that's why Robinhood is very slow to roll out their their credit cards because, they want to make sure the underwriting of it is correct. But as you can see right here, credit card delinquency rates remain concerning. They are getting to levels that are higher than where they've been in the past. As you can see right there, that 2023 to 2024, you can see in 2009 how high it was right there. Same thing on the second chart. We're getting back to not 2009 levels, but it's getting up there. I mean, like, no one can deny that credit card delinquencies aren't starting to get up there. My argument against the rate cuts aren't bullish for the consumer or small businesses like a pizza shop in the short to medium term is that eventually that will be bullish. Eventually it will be easier, maybe in the next 6 months, to finance a car, to finance solar panels, to pay a lower APR on your credit card debt, to originate a personal loan, right? You're going to start to see these rates come down. We saw this with Robinhood already, margin rates that they already cut in half from 14 to 6.75 on Monday or on Thursday, a day after the Fed cut, they put it down to 6%. So they dropped it even further, or 6.25. So they dropped it by 50 bips. So you're already seeing different aspects of the economy start to adjust when it comes to the amount you're paying. That's not going to affect consumers immediately, but it will affect them over the next 6 months. And the stock market is forward looking. If companies can, like, for example, a firm can start approving more people because rates have come down. And a firm, Max Levchin said this on the last call, the reason the stock went up 40% that week is not only because they're going to be profitable soon, but because they said, hey, rates are coming down, which means we'll be able to apply, we'll be able to affirm, no pun intended, more people for these loans, for these buy now, pay later loans. And also, our underwriting has gotten so good because we've been so battle tested over the past 2 years, because you've had to underwrite effectively if you wanted to survive as interest rates came up, that we just have better AI technology to underwrite loans and to risk mitigate. So a company like a firm, I think, can give guidance 6 to 7 months from now on how many more people they're going to be introducing into the buy now, pay later ecosystem, which means, yes, that consumer is not going to get into it today. They're not going to get approved today. But if they get approved 6 months from now and a firm says, hey, we expect to approve a couple million more people, that is where it's good for the stock market. That is where it's good for companies. And that is where it's ultimately going to have an impact on small businesses, because if 2 quarters from now, we should be down another 75 bips at least. So I think when we're down to 4% or 3.75% on the federal funds rate, yeah, you're going to start to see, I think, a lot more momentum for consumers and small businesses as well. So I think that's going to be good. And I think that's not going to be a bad thing, even though, yes, these charts are still real. Credit card delinquencies are going up. And, this is where I don't have an answer. 2025, I don't know if it's bullish or bearish. I really don't. I think 2025 has a good chance of being bearish because these charts are concerning. And at some point, this stuff has to come home to roost. I think the Fed is trying to figure out, how do we enable a soft landing so that these things don't get exacerbated? And I think there's a world in which they figure it out. There's also a world in which they figure it out for 5 months and then everything collapses. I'm just hoping that all of us can escape 2024 without any major scars, because then in 2025, you at least get to make the decision on how much you want to take off the top, how much you want to leave into the markets, how much you want to kind of wait and see how things play out before you decide to dive back in, which I think is fair. But you need the bull run to kind of at least get through 2024. And if they do it effectively, which so far you can't really say the Fed has not done a decent job, then I think that gives you an opportunity to maybe deal with the massive amounts of spending debt that we have, and also with the overall bad macro indicators that exist. Like, just the US spending in general is like ridiculous, right? Forget consumer spending. The fact that we're spending and we have $35 trillion in debt. I don't know if Trump or Harris is going to find a way to lower that in any meaningful capacity. But if they do, as rates come down and there's, different tailwinds for the broader US consumer based on that in and of itself, maybe that's good, maybe that's not. So 2025, I have no clue what's going to happen. I don't even think I want to try to predict 2025. But end of 2024, to see unemployment go up to 5%, to see delinquency spike to 2009 levels, to see earnings growth over the next 3 weeks that we're about to get into just completely demolish, I don't see any of that stuff happening. And if I don't see any of that stuff happening, then I think we will have some momentum. JP says, is there such a thing as potential national deficit bubble? Obviously, housing market has crashed, but is there any way that the national debt can actually matter at some point rather than just being a growing number? So this is a really good answer. I mean, this is a really good question. My answer to this is, based on what I've read, the U.S. national debt doesn't matter. Like it actually really doesn't fucking matter. You know why? Because we have the strongest military in the world. That military, our debt is basically backed by the military. That's one of the only things it's backed by right now. And so far, everyone in the world believes that the US is good for it. Why does Japan buy our treasuries? Why does China buy our treasuries? Why does the Middle East buy our bonds? It's because they believe that the US is the freest, most economically prosperous country in the world, and they're going to be able to solve any of their solutions. And they'd rather buy our bonds than like India's bonds or Japan's bonds, where Japan's, growth is like anemic because they simply don't have the innovation that the United States has. However, the caveat to the US debt not mattering is if we stop growing. The promise of AI, quite frankly, this is why when everyone's bearish on AI, I'm like if you're bearish on AI because you just don't believe on it, you don't believe in it, sure. But if you actually have done the research, it makes sense to be bullish on AI and go long on just like triple Q, which I think is like basically going long AI at this point. Because the productivity gains from AI is what should mitigate the massive amount of spending that we're doing. What I mean by that is if we are a more productive country and we are a more innovative country and we are growing more, we can help grow our way out of the massive debt that we are incurring. If we stop growing and we have anemic growth over the next couple of years, we have growth that's like, what are we growing right now? 2.5% GDP. If we have like growth that's like 0.5%, or worst case, we have negative growth, that's when the debt doesn't matter, because now, the Saudis are looking at our debt. They're like, the United States is not even growing. Why are we buying their debt? Because the only way to pay back the debt is if you have more revenues to collect ultimately from taxes, and you need, or just like broader GDP has to grow. So the debt to GDP ratio doesn't get as extreme as it is in Japan, which is like 240%. I think ours is like 140%. And you need growth to do that. You need NVIDIA to get this is why I was so pissed off when the FTC was or the DOJ was trying to sue NVIDIA, because I'm like, dude, like they're the only ones that are really building out the AI infrastructure we need for, AI for the United States to win AI. You want NVIDIA, which is thankfully an American company, to be building those chips. Why would you want to stop them right now? Especially if you're not going to stop spending in the United States. Don't mess with these companies. Let them grow, because if they're not growing, if Google's not growing, if Meta's not growing, we're screwed. So the US debt does not matter for two reasons. We have the strongest military and we're growing. If our military stops growing, if our military is not feared by the Russias and Chinas of the world, aka Russia decides to invade another country and they don't think the US is going to do anything about it, or China decides to invade Taiwan, they don't think the US is going to do anything about it. I know that's so nuanced and there's so much there, but like as a metaphor, if Russia and China just don't care about us anymore and they're willing to explicitly show they don't care about us anymore, that's bad for our debt. And then number two, if we stop growing, that's bad for our debt as well, because we don't have any money to pay back the debt. Until then, the debt really doesn't matter. And then the reason I say that is not because I'm trying to be fiscally irresponsible here. It's because like, who else's debt are you going to buy? Like really, who else's debt in the world is so much better than the US's debt? You're going to buy South Korea's debt? You're going to buy Japan's debt? You're going to buy Iraq's debt? Afghanistan's debt? Like no one wants that debt. Everyone wants the US's debt. And so it's one of those things where it's like, yeah, kind of look the other way and deal with it later. Hopefully we get an administration that can stop spending and encourage more growth. I'm very skeptical that any of the administrations are going to stop spending and that both of them will let massive growth happen. But hopefully, one of those administrations can do it. But yeah, so from a debt perspective, I don't think it's the biggest deal in the world, but it's definitely something we have to keep an eye on at the end of the day. Okay, cool. So that's what I had there on the macro. I want to share one video. We have a new S&P 500 target from BMO for 6,100. And I want to walk through their logic on how they get there. Because it was kind of interesting how they got to 6,100. Nothing too crazy in terms of their logic, but I did think there was some interesting stuff there on how they brought up these levels. So let's take a listen to this. This is one of the biggest bulls on Wall Street calling for 6,100. I think some of these points make sense. We'll talk about these points and then discuss why it matters for equities in the next couple months. Let me know if you guys can't hear it. I think you should be able to hear it, but let me know.
The new biggest bull on Wall Street. His name's Brian Belsky of BMO. He joins us now because he raised his S&P targets, the highest on the street, 6,100. It's good to have you with us. I do recall on August 5th, you said we're going to retest the lows. And here you've raised your price target to the highest. We knew rate cuts were coming. So what happened?
Well, thanks for having us. I really appreciate it. The resiliency of this bull market cannot be doubted. That's number one. Number two, I think it was common sense. Typically and historically, we see August and September being very, very volatile, and they were, unfortunately, for us trying to time the market and get this call out in terms of upgrading the market when the market was down. It didn't work out. And without trying to be too cute on this, Scott, we just simply believe stock prices are going to be higher by year end. That's number one. Number two, third year of the bull market starts to occur and unwind late in October. We think, again, it's part of a longer 25-year secular bull market that we've had the call on for a while. Number three, we do believe that the Fed is doing a great job. We believe the Fed that we're not heading into recession. We believe the Fed that we're heading into more of a soft landing. And per our call from a longer term perspective, we think that we're in this 1995, 1996 environment where we handled a 24 times earnings multiple during the times of the Nifty 50, which is very similar to what we've seen in terms of the Magnificent Seven. Lastly, I'll say this, and I think this is 2 points that people are missing. Number one, the Magnificent Seven and really the top 10 biggest stocks in the S&P 500 have underperformed in the third quarter for the first time in over 2 years. Yet the market's hitting new highs. I think that's very notable. Why is that? Because you've got 339 stocks in the S&P 500 outperforming the market. We haven't seen that type of breadth and broader outperformance in almost 22 years. And
I think that's a hell of a point. So if the Mag 7 don't like gap up towards the end of the year, but the rest of the market does, that's where you could still see the S&P 500 go up, regardless of if NVIDIA gets like 150.
These are things that people are missing. We think that speaks to the overall breadth and strength of the rally that obviously we still see continuing.
Was this because it was 50 and not 25, and the supersized cut led you to a supersized target?
No, we actually wrote the piece a couple days prior to. We wanted to see what the language of the Fed was going to be. Internally, in my own team, we were struggling with 25 or 50. At the end of the day, it's a great question. It's a moot point. We just happened to do it because we know that the market is on a short-term basis very reactive, and we knew we'd see some reactive moves after the Fed spoke on Wednesday, and that's why we published the piece before the market opened on Thursday.
Okay, so I thought what was very interesting there is basically he was making the argument that there are other stocks that are growing earnings better for the first time in 4 quarters than the Mag 7. And so honestly, if you ask me right now which one outperforms in the Mag 7 by the end of the year, there's only two that I would mention. Number one is Tesla, because although Tesla's caught up and it went from 130 to 240, 1010 is a major catalyst. And if Tesla really shows off something special, I think the market's going to get excited for Tesla. Maybe I'm wrong, but I think that Tesla's still slightly green year to date, but it's nothing like the other Mag 7. So I think Tesla can outperform. And then second is Google, simply because Google has sold off so much that I would imagine Google has a chance to kind of catch up. But outside of that, the rest of those guys, in terms of the Mag 7, NVIDIA, I'd be fine if it ends the year at 120. I think that would decrease the forward next year's PE by a lot, which would be really just bullish in terms of like a consolidated price with a healthy multiple going into next year versus it being close to 3.5 trillion by the end of the year. Because I don't know if that sets up 2025 to be that strong. Meta, could I see it going to 600? Yes, because Meta's going to have a great earnings, but Meta already is at new all-time highs. Like, I think the risk reward on Meta is tough. Microsoft and Apple are overvalued, but they benefit from passive ETF inflows every single 2 weeks. So those companies are probably going to stay overvalued for a long time. I think Microsoft could have a tough earnings if they miss on Azure a little bit, but the dividend increase and the buybacks are going to help them out. Apple, I watched a couple of videos this weekend on YouTube of people going to buy the iPhone Pro. They said there was no lines. They got their phone immediately. There was no having to wait, which means there was, maybe not as much demand. I don't know what the iPhone upgrade cycle is going to look like, but I think Apple is a bit overvalued right now. I would not be buying Apple. Could I see it go to 250? Yeah, just because it's Apple and people are going to put money into Apple. But from the Mag 7, I think it's Tesla and Google. The point is, even if the Mag 7 stay where they are right now, they've done so well this year, aka the Qs, which are up. Where's the NASDAQ this year? The NASDAQ this year to date, is up 20%. I mean, it's pretty damn incredible, 19.8%. And it's not even at its all-time high that it was at in July. So I think if the rest of the market starts to come together, aka the small caps, I don't know if Tom Lee is going to be right about IWM, but so far it's looking like It's not too bad. IWM up about 11% year to date, and it's outperformed the S&P 500 since the August 5th lows. You're going to see that diversification and that broadening out, which can still help the S&P go up, even if the Max 7 don't go up, which is bullish, dude. And another 50 bips is going to help all those companies, all those smaller companies, or all those mid-cap companies. Like, I don't see how 50 is bearish. The only way 50 was bearish and another 50 would be bearish is if we're already in a recession. And none of the data that we're looking at seems like we're already in a recession. One more point from Goldman Sachs. So we do have PCE this week, which is going to be important. Goldman right here says they see August PCE at plus 0.12%, core at plus 0.16%. Let me zoom in on this one. So that I think is good. The consensus on PCE, let me see if I can pull that up. That'll be on what, Friday? Consensus on PCE is up 0.2% on the monthly. Previous was 0.2%. The expectation is 0.2%. So Goldman has it going up by, on the monthly, 0.12%, which would bring the year-over-year rates to 2.25 and 2.269. Given energy took a nasty decline over the past couple of months as well, I would imagine that core PCE starts to come down a little bit, which is not going to be the worst thing in the world. And basically it would be 0.2% because you round up 0.16, it goes to 0.2, but it would still be a little bit lower. So consensus again is 0.2. Goldman is at 0.16. Small difference, but still a bit of a difference. And if that's good, CPI in 2 weeks should be decent. PPI should be decent. We should be having inflation closer to 2.3, 2.4%. Right now we're at 2.5. Maybe even it comes to 2.2. You have good earnings growth. You avoid a recession. I think that's how the year potentially could end out. So we'll see. But those are kind of all the macro things that I'm looking at right now. Again, we get some ISM data. We get wholesale inventories this week. We get a little bit of Fed speak by Collins. Nothing too crazy this week, though. We get University of Michigan inflation expectations, and we get the consumer sentiment. But next week is when we're really going to see a lot more data going into that first week of October. Alexander says, I'm traveling in Taiwan, super large for the iPhone lines here. All right. So, in the United States, I'm seeing that the lines aren't that aggressive. Maybe across the world they are. Also across the world, maybe people haven't upgraded as much as people have upgraded in the United States, where that's where kind of the Dan Ives thesis of going to Asia and seeing that the upgrade cycles are larger. Maybe that's why he's so bullish, saying that Apple is going to be $300 a share, because it's obviously not because of Apple Intelligence. Like, that's just not happening yet. But if people just want to upgrade because they've been stuck on their iPhone 12 for a while, then yeah, that could do it for you. And that's where you can get that momentum for Apple. Powell speaks this week. Does he? Let me check. Let me make sure. I don't think Powell speaks this week. Actually, no, I think you might be right. Let's see. Another headline. Johnny Ive, who was the guy who made the iPhone and iPod and designed it with Apple. He is working on a new device with Sam Altman and OpenAI. The Verge reported that. If OpenAI comes out with a phone, look, I am so bearish any hardware device built on AI. I hated the Rabbit. Hate is a big word. I was just not bullish on the Rabbit or Humane or these stupid AI pins like the Vision Pro, obviously. Not bullish on any of that stuff. I think the iPhone is the king, or just like a phone in general. Call it iPhone, call it Android. I think that will be the AI device that we use. So I'm not bullish on any of those devices. And I don't think people are really going to sacrifice the safety that they have in their personal phones for like some new device. But it seems like Sam Altman's trying. And if he's trying, then you're going to have more competition, which ultimately will lead to more consumer choices for AI products. Does Jay Powell speak? Goolsby speaking tomorrow at 10:15. If that's live, I'll stream it. Neil Kashkari is going to be speaking tomorrow at 1 p.m. Meta's having an event on Wednesday, the Meta Connect event. They're going to show off some VR stuff like Evan Spiegel was showing off with Snapchat. Oh, Jay Powell speaking 9:20 Thursday, September 26th. You're right. It's a pre-recorded opening remark before the 2024 Treasury Market Conference hosted by the Federal Reserve Bank of New York. I don't know if that's pre-recorded, so I guess we'll get to watch it, but I don't know if it's it's not going to be live. So, okay, so Jay Powell speaking and Goolsby speaking this week. So we do have some Fed members speaking, and we'll see what they have to say as well. Oklo is a nuclear energy company that Sam Altman is on the board of, just saying. Yeah, so this is an interesting company. Ironically, I was speaking to one of the Palantir alumni at AIPCon, And he got into this company when it was on the private markets, I think at like $5 a share or something. So I've known about this for, I know about it. I knew about it before he brought it up, but when he brought it up, I was like, oh yeah, that's the nuclear fission company. So this company is interesting. Look, at the end of the day, the reason they were up 30% is because of a nuclear deal they signed with Amazon, or I think rumors of a deal they're starting with Amazon. A lot of these stocks that are trading off energy justifications for AI, I think they are winners. I don't know which ones are going to be the winners. So Oklo, again, it's a startup that's public, and the market got really excited when they announced this Amazon thing. And so that's why they came up. Same thing with Constellation Energy. Now, Constellation Energy is way bigger than Oklo. But still, it ran up primarily based off this idea that they're going to be supplying more energy. So I think if you bet on those, you got to just know more about them. Like, I don't know much about Oklo. I know Sam Altman's on the board. I know he's the co-founder of it. And I know nuclear fission and nuclear reactors are something that people are going to care about. And countries like Germany really haven't cared too much about them. It's kind of been denied as like the source of energy. If it starts to become in the mainstream, yeah, that's a bid for nuclear. But does that mean Oklo wins? I don't know, right? And so I think if you trust these individual names when it comes to the energy revolution we're having with AI, you just have to know about them a lot more. But definitely Sam Altman has his fingers tied into the energy sector, the AI sector, obviously with OpenAI, and now maybe the hardware devices sector, where he sees a device that is going to be fully functional with AI. The problem with these devices that are based on AI is that the idea is the operating system should be the human talking to the device, and that's how things get done. I fundamentally don't think that is the correct paradigm for engaging with a consumer device. I don't think it's through glasses. I don't think it's through touching the air, acting like you're doing magic. And I definitely don't think it's through talking to an LLM. I think it's through scrolling. By the way, I changed my background. I like this background now. It's like a nice black background. It was gay colors before, but now it's a nice background. But I think most of these AI devices are trash, dude. I really don't think they're going to take off. I'm not excited about them. Now, maybe the form factor becomes so easy to use in the next 5 years that it works. Until then, I think the phone's going to win. And ironically, that means I should be super bullish on Apple. If I'm this bullish on this device, the problem is the valuation on Apple is stupid. And so like, it's hard to be bullish on Apple. Maybe long-term, you just don't care about the valuation because it's Apple. Sure, that's an argument. But also, ironically, the device is so good, I don't think people need to upgrade that much. And so that's another problem when it comes to Apple as well. But yeah, if you're going to get into the Oklos of the world, you got to remember, these are still basically penny stocks. They're still basically penny stocks. And just like Enovix, we saw Enovix this year. It went up all the way to 18, came right back down to 8. It got a couple of deals. It was like the same thing that happened with Enovix is happening with Oklo. They got a deal. They ran up a lot. And then the market stopped caring about the deal and the stock fell. Could that happen with Oklo? Maybe Oklo keeps running. But those things are very important to think about when it comes into these energy names as well. Okay, so that's pretty much all the stuff on the macro. I don't know much about Poet. How has that stock performed? Poet stock, I've heard of it a while ago. I know ticker symbol you made a video on it. I don't know much about the stock. I never really deep dived into Poet. Poet Technologies, year to date, Poet is up 237%. Okay, cool. That's awesome. But again, that doesn't excite me because these are penny stocks at the end of the day, dude. The market cap, 205 million. Like, it's not that these stocks don't have potential. It's just that the amount of conviction you need to have to buy these penny stocks, especially when, they're likely not profitable, all that price of sales are ridiculous. Then, I mean, yeah, it's like the price of sales is 1,600 on this thing. That doesn't mean it's not a good investment. That just means that, like, I don't know, in a world in which you want some profitable growth and you want some winners, it's basically like investing in a startup that's public. To me, those are the most disposable parts of your portfolio that you can afford to lose. That's where that money goes. Unless you just know it so damn well that you're willing to make it, a top 5 position. But I don't. I would have to do the research on something like that. Last call on Palantir price. What's Palantir's price right now in Robinhood? Let's take an update on that. Palantir is $37.10. Bitcoin 63,600, Robinhood 2290, IWM is up, S&P 569, Nvidia 117. Markets are up on Robinhood, but nothing too crazy. Okay, cool. Let's talk about Robinhood. So I got a theory from a follower, and he posted this on his Twitter, and I think it's a crazy theory. I kind of don't think it's going to happen, but if it does, it would be wild. So this will be our last segment of the day. This was on Robinhood. Again, they're having an October event very soon. I'll try to stream that event. I don't know if I'll be able to because I'll be in India, but I will try. Here's what he said. He said Robinhood is going to introduce a platform to buy and sell secondaries from startups inside of the app. Now, this is kind of crazy. All right. So he says, I believe Hood is going to launch a platform for late stage startups to raise money from the public. So let's listen to his thesis. Look at the sponsors and speakers at the summit. There's a few interesting ones. Dealmaker, Miso Robotics, and EnergyX are three of the ones you want to look at. So these are the sponsors of the Robinhood Summit. Okay. Dealmaker allows private startups to raise money. That's what Dealmaker is. The CEO of Miso Robotics and EnergyX are speaking at the summit. This one, why would these guys be speaking at the summit? Right? Like, why? Like, why would two CEOs of two startups that are basically, relatively unknown companies, not that they're bad companies, but they're just unknown. They're not like OpenAI or anything like that. Why are they speaking at this event? Miso and EnergyX are raising money right now with Dealmaker. So Miso is raising, or EnergyX is raising 75 million. Miso is raising, I think, like a couple million as well. So two companies that are raising some money. All right. So the question is, why would Hood promote private startup equity raises to their users? Vlad is very user first. They wouldn't do this as an ad on the day of their biggest product launches. I don't think they're getting paid by these startups to like allow them to pitch on stage to get potential investments. Like, that's just kind of weird. And if they did that, by the way, I would critique them for that. I'd be like, why would, like, people are already paying to go to the summit. Why would they want to pay to go to the summit, sit down there, and then get pitched to invest in some like elusive startup? Like it feels kind of scammy, quite frankly, if that's what they were doing. They would only do this if they could offer it via Robinhood to their users. I imagine a similar product to Republic.com. Republic.com is another platform where you can crowdfund and raise money on the platform itself, which also has a secondary equity market. And this makes sense for Robinhood. Robinhood users want to trade, not have their capital stuck in private equity. So I think it's a bit of a stretch for them to unveil a platform like this. I think the main thing is going to be active traders. And I think it's going to be, people that trade futures and stuff like that. I think launching a secondary market on Robinhood for trading shares of startups is super aggressive and ambitious. I think it would be awesome if they could actually pull it off and they did it. And I am very confused. Why are these two guys speaking? Like why are they speakers, right? The only reason I would imagine they're speakers is because they're pitching their startup. If they're pitching their startup, either Robinhood's legit, like offering them airtime on their event, or Robinhood is going to have a feature in the app that allows people to buy shares of startups on the platform itself. This would, as Gene says right here, change the game. I mean, if you could own private shares and trade them on Robinhood's platform, that would be kind of crazy. And I think that would be the surprise no one's expecting. They keep saying, hey, we got this legendary thing that we're announcing. I don't know if that's just branding or they legit have a product that no one has heard about them releasing something like this. We've had no hints. This is the first theory I've seen of something like this that's different than the active trader platform. If they do both of those things, I think that's pretty damn bullish for Robinhood. So that would be pretty exciting. We'll see what they end up producing. If they do produce that stuff, I think it would be pretty cool. I think it would be an amazing platform. We'll have to see kind of the kinks of it and if it works out. I do think it's a stretch. I think it's very ambitious to launch that, and it would shock people massively. I think the street would be like, holy crap, these guys are really going for it. So I kind of, if you have to gun to my head, say, is this going to happen? No, I would say it's going to be an active trader product. It's not going to be like the startup marketplace, but if they do have something like that, that'd be pretty cool. So that's another thing. I mean, this is a good comment by John. Most companies go bust. It's hard to invest in startups, right? A lot of startups fail. So there is an argument that it would not be the healthiest thing for people because most of these startups will go out of business. However, at the end of the day, that's not really Robinhood's fault. That's like that. Most people want access to liquidity in these companies. And if a company gives you a platform to get access, then it's your decision ultimately. No different than if a stock goes bankrupt or not, right? But I do think Robinhood would have to have so many startups being traded on the secondary marketplace that would create like a bid and a ask for these shares of secondary startups, which again, I think it's such a complicated thing for them to figure out. But if they do it, that would be crazy. I think it's going to be the active traders product, but we'll see if they have any more stuff that they're building up to. Okay. That's pretty much it. That is pretty much thing. Their IPO thing also kind of fizzled out. Well, it wasn't Robinhood's thing. It's because there wasn't any IPOs. There were no, over the past couple of years, there have been very little IPOs. That's why I think Apollo, by the way, is investing in Intel, because usually Apollo goes to actually private companies and tries to buy them out or all that, or give them more equity offerings. Why is Apollo Equity Management, private equity management, going to Intel? I know Apollo takes stakes in public companies, but like Intel is just like, I think Apollo has a lot of money. They haven't been able to make deals in the private markets because there have been no deals. Now with rate cuts, that should open up. And that's why they're tapping out public companies. Just like Elliott did the same with Starbucks. So I do think more money is going to be flowing into the markets now that we have this rate cut in place, and with the expectation of more rate cuts, we should probably have more money coming in. We should have more IPOs. I think when Databricks IPOs, that's the top of the market. And that's when I'm selling out a decent amount of shit. But until Databricks IPOs, I think we're good to go. But when that happens, then when Databricks has enough people, when they've convinced enough people to buy their stock at like probably 70 billion market cap, they're currently like, I think 60 billion right now. They would IPO close to 70 billion or 40 billion. That's when I know there's too much money in the system. Or AI maybe is so expansive and there's so much wealth, so much prosperity that Databricks has enough money to go public. Maybe it's either one of those two scenarios. So we'll see if that plays out. Dylan says, could you see Robinhood ever merge with an app called DraftKings with the money that would flow in and out of each? Yeah, I think sports betting is huge. DraftKings, what's DraftKings market cap? I've always thought Robinhood should buy them out, but I think DraftKings is a pretty big company. DraftKings market 19 billion. Yeah, Robinhood's market cap is like 25 billion, right? So it's like, that would be a tough buyout. Also, I think DraftKings wants to do this on their own because they know how big the opportunity is. Could Robinhood create a product that rivals DraftKings? Yes, but DraftKings and some of the other ones kind of have a duopoly on this. It's not easy to get into the sports betting game, especially with all the regulations. DraftKings fell because Illinois introduced a regulation a month ago that would tax them double, and that's when they fell like 10% that day. So it's a very tough market, but I think you will be able to trade a lot of things on Robinhood one day, not just stocks. I think that's where the future of this is ultimately going. Okay, cool. What else do we have? Are there any other headlines that I had? We talked macro, we talked Palantir. It'll be fun to see what happens with Palantir tomorrow, man. Maybe, could you imagine if we push 38 tomorrow? Could you imagine if we fucking push $38? That means, I have to show you guys this. So one of my friends, Christian, he's an option seller. And he's mainly been using Fidelity. He switched to Robinhood. This is the first time he switched to Robinhood. So he on Saturday he tweeted, I did it. I transferred my Fidelity to Robinhood for the bonus, and we'll use that as my main broker now. I think he's playing with high 6 figures, 7 figures, or low 7 figures. So that's a big transition. And then he said he got a family member to switch, 260,000. Then he said, I'm working on another family member to switch with 100,000. And then this guy, Nick, said, you convinced me I'm going to switch my 2,000 Tesla shares. That's another 480,000 that's being switched. There's just a lot of money coming into Robinhood. So I think the September deposits are going to be super, super bullish. And I think that we're going to see a lot more momentum in the context of Robinhood's deposit numbers. And hopefully that is bullish for that 40% growth number that we're looking at going into Q3. So we should see some more money. When are they running the 1% until the end of October? No, until October 1st. So you have like 9 days left. Patrick said, I'm switching Schwab to Hood. Okay, there you go. Not bad. I was talking to someone over the weekend who put in a lot of money into Robinhood as well. Like a lot of money, dude. Like he transferred a lot of it. So there's people transferring a decent amount. So, even with interest rates coming down, that hurts their net interest income. I think they'll be able to make it up with the transaction revenues and just more trading as well. I got all my family to hood, probably 2.5 million or so. Yeah, dude, I believe it. There's a lot of people transitioning. So that's going to be very bullish. All right, I think that's it for me. I don't think there's any other headlines. I'll be back on the market open tomorrow, 8:45 a.m. I saw this tweet. Let me share this last tweet. This tweet was really funny. These are the top podcasts in the United States of America. The caption was, "The European mind cannot comprehend." Top 4 podcasts in America are Joe Rogan, Tucker Carlson, Candace Owens, and then Talk Tua with Haley Welch. It's an incredible it's just an incredible 4 podcast run in the United States. So I know a lot of our European friends are like, what the fuck? What are you guys listening to in the United States? But that's what we got. Talk about SoFi. SoFi is awesome. I love SoFi. They're great. I think SoFi will get some momentum. I think SoFi breaks through this $9 range. I think rate cuts are bullish for SoFi. There's 190 million shares shorted. Those 190 million shares eventually are going to move on. I am not a fan of SoFi's technology. I don't love their app. I do think they're going to have more loan originations, and I think that's going to push them back into double digits, hopefully by the end of the year. I think with another 50 bips, you get 100 bips down, dude. That's bullish. And so if the shorts can stop manipulating it, which is a lot to ask for because it's 18% short, which means Noto's going to have to really up Q4 guidance to get the shorts to be scared, because right now the shorts are not scared at all. Then I think SoFi runs. If not, then it's going to be in a little bit of a tougher situation. But that's what we're looking at for SoFi, and we'll see what happens. Bitcoin, wow, look at Bitcoin, 63,796. Bitcoin trying to make a run. Again, just like SoFi, I think rate cuts are bullish for crypto. And if Bitcoin can break into the 65s and maybe into the 70s over the next couple of weeks, I know that election is going to matter a lot. If Trump wins or loses, it's going to matter a lot for Bitcoin. But if the momentum's there, if it lines up with the trajectory of historical halving events and where crypto kind of goes from there, then I think we'll see some more momentum with Bitcoin as well. All right, cool. That's it for me. I'll be back 8:45 a.m. tomorrow on the Market Open. Thank you, everybody, for being here. Hopefully, you guys had a good weekend. We'll be back. We got a stock market to open up, and we got some stuff to analyze coming in tomorrow morning. All right. Bye, everyone. Thank you for joining. Have a good night, and I'll see you early tomorrow morning. Bye, everyone. Good night.